Welcome. Thanks for tuning in to BQ Prime. We have a very special guest today on the back of a very special listing, 56% gains on listing itself, after which also the stock is up. It's up nearly 70% from IPO price as we speak. We have the management of IREDA with us a very special day for you, sir. Congratulations for the bumper listing and thank you for being with us.
Thank you, Mr. Hers, and thank you very much for inviting me for this program. And congratulations to you as a stakeholder now, and congratulations to all the citizens of the country because it was their company, 100% owned government company. Now their company is exhibiting this kind of results. So, but this is quite on our expected lines. We are not at all surprised. And since in the past 2 attempts have been made to do the IPO, and as well as post LIC IPO, this is the first IPO from government side. So there was a lot of perception issues with the stakeholders as well as prospective investors. So in order to address those things, we had to gear up to the requirement, what is required for a best quality corporate governed company in India, and in the time to come can become in world also.
Right. Perfect, sir. That sets the context. Let me ask you first off with regard to loan growth. You know, your AUM has grown very healthy clip. When I'm looking at your 2019 numbers to now, 30% plus in terms of AUM CAGR. Can that sustain? Can that continue going forward? And what is the kind of growth rate at which you feel would be the right rate for you to grow at over the next 5 years? So just to try and understand where your book will be 5 years from now.
See, let me first clarify. We never focus on numbers. We focus on fundamentals. I joined the company 3.5 years back, and company was almost 33 years then. In 33 years, despite having the command and confidence and clarity, our team could have a loan book of 23,000 crore. What we had experienced that we are most preferred then as well as today, and likely to continue that also, lender when the project is in construction stage. But post construction, that COD and post COD of testing and commissioning, that techno-commercial parameters assessment, the project largely get de-risked. That is the typical nuances of renewable projects. So our interest rate was not capturing this dynamism automatically. But what we have brought in now, when the project is getting de-risked in a staged manner, we are also offloading those risk premium from our interest card, which has enabled not only to keep on enhancing the disbursement and loan book, but also retain that loan book. So that enabled us just to add in 3 years, 24,000 crore loan book. See, when our team is doing the due diligence of any project, a lot of hard work is being done. And if that account we do not retain with us, then it is quite kind of like dissatisfaction to them. And moreover, if you see the larger interest of sector development, when we have 500 gigawatt target, huge amount of business opportunities there for all. Now, since we have the expertise with us, we need to utilize our time and expertise for speedy development. So what we did, we retained our customers, we slightly compromised on the NIM, and it was very much essential because in last 3 years, 2 years was the worst COVID period. Our developers wanted, and it was their requirement that they should sustain. So by compromising little on NIM, we enabled that they could sustain. Account did not become NPA. And our NPA also got reduced from 7.18 net NPA in March 20 to 1.65 in September, and it was 1.66 in March. Continuously, consistently decreasing in percentage of NPA, not only because of the loan book enhancement, but also recoveries. We have almost reduced the NPA 1,000 crore in 3 years against simply a write-off of 21 crore out of that. And the company of this kind and size of 36 years almost financed around 1,07,000 crore till September. And our cumulative write-off is just 203 crores. That speaks what kind of quality management we do. And in the way forward, what business and numbers you are asking. As I said, if we continue to focus on this best quality corporate governance, I'll touch upon that issue again, why it is best quality corporate governance when we talk. Ease of doing business, transparency, clarity, everything we have enabled. So we opened the office just 5-6 months back. It is IREDA Business Center. It is a zero paper office. And we have planned to make the entire company zero paper company in the time to come. So which means we have automation, digitization, and ease of doing business. That is what our Honorable Prime Minister's mandate to us. And
Right.
private sector should come forward and play, and government has to be there enabler. See, our larger loan book is 77% loan book is private sector. And this 23% also is grown in recent 3-4 years, because in my earlier employment, I was looking after government loans. So during the COVID period, quite a lot of soft funding was available with us, so we could finance. And some of our utilities were in the need.
Right.
Normally, we do not add government loan in our book because we focus on developing the project, so developers will finance. So be it
Right.
government, private, we can go. In the time to come, we'll continue to this kind of growth as well as numbers.
Right, sir. So sir, 30% growth looks doable, right? Point being, with the kind of asset quality, with the kind of conservativeness which you've described, 30% plus loan growth looks doable.
See, as I told, we are not looking at number. Again, let me tell, even if our loan book is not growing at 30, even if we could retain the quality assets, then our provision
Understood.
coverage ratio will go down. If my
Understood.
provision coverage ratio is going down, my bottom line will go up. So
Correct.
my investor is interested in ultimately at the end of the day, what kind of PAT and what kind of net NPA I'm giving them.
Correct. Correct. Okay, perfect. Point taken. So what about, so you've raised fresh issue of roughly 1300 crore, 1290 crore to be absolutely precise. Overwhelming in terms of, the subscription numbers, 38.8 times oversubscribed, retail 20 times plus. So whatever, I won't get into the numbers, but the point is, where does it take your capital adequacy? And what is the extent or the number of years that you foresee this capital to suffice you?
Fair enough. Since the demand size is pretty huge, we need not worry about that. So we have to augment the resources in order to ensure the healthy CRAR as well as a healthy and best compliant RBI governed NBFC. If you see, last 3 inspection has happened, RBI has given clean report for 2 years. 3rd year is in a pipeline. So from that front, we are clean. And when we talk about best quality corporate governance, we submit full audited result every quarterly basis since last 2 years. Despite not being an equity listed entity, we are a debt listed entity. It was not mandatory, but we are doing. Even now also it is limited review mandatory for us, but we'll always attempt to continue to do this kind of PA. So for an investor, what is important? As I told, for NBFC, if we retain our clients with us, we'll continue to earn the interest and we'll continue to retain that NPA also at a reduced level.
Sure.
Second, when we go to the market now for raising funds, now we are listed and Navratna status is expected very soon for us. We are upgraded from B to A in September. So when we are only a B Schedule B company and AA plus rating, with that we could manage most competitive borrowing. So with upgradation to Schedule A and Navratna, and with this listing experience, and I am sure we will continue to sustain the kind of trust and confidence what our borrowers had with us. Rather, they will be further enthusiastic. They were after us, particularly in me. Sir, please get it listed. Let the whole world know that what kind of good quality work IREDA is doing. See,
Sure.
we did the roadshow. And in roadshow, generally, we go to the institutional investors. You see what kind of subscription happened there? More than 105 times in QIB and more than 24 times in NIA. So more and more people will be aware. See, one important thing what we are doing, it is not simply we are financing. Anybody participating here, they are contributing for sustainable environment for future.
Yes,
so more
point
and
taken,
more,
sir.
more and more we grow, more and more decarbonization will happen, and more
Sure.
and more livable world will be there for our next generation.
Sure, sure. Absolutely, sir. Absolutely. So where does it take your capital adequacy? What does the fundraise do?
Right. So we'll prefer to keep our CRAR at 17 in order to sustain our rating. Though minimum is 15 and
Sure.
we can go up to minimum, but we will not do that. We'll try to keep at 17. Right now it is 20. With this infusion, it will further improve. But we have quite a lot of projects in pipeline for sanction and disbursement. So
Sure.
that is going to happen. We are coming to market to again raise funds through debt because we need to finance. And if you see typically in second and third quarter, our majority of finance and disbursement happens. So
Understood.
these 4 months will be very crucial and critical for us. Last
Right.
3 months, our team was fully occupied in ensuring that this IPO becomes a grand success, which they have achieved. And these 4 months coming, they will be completely focusing on reaching to fully leveraging our net one fund.
Understood. Got it. Got it. Fully understood, sir. And sir, if you can also talk to us about margins. Your margins from FY21 to now have declined around 50 bips. It's a tough margin environment in any case. Could you talk to us about where do you see margins settle? Where should one see the realistic margins be around? Also, one more piece is you did speak about how you have a special mechanism where loan rates come down as the project starts to progress, which you did speak about at the first question of mine. Could you talk to us a little bit about that? How
Yes.
does this mechanism work? So margins and how this mechanism works.
Okay. See, NIMS last 2-3 years, as I told during COVID time, our developers, it was in the larger interest of sector that we need to little reduce. So we support them. So their account do not becomes NPA. That has already paid up. And see, we help them during their dire need. Now they are available with us. I'm quite confident. Even if we charge 30-40 pips more, they still will continue to us. See, already our NIM has started improving. If you see, NIM was 3.36 in March 20. In September, it is 3.75. In the time to come, we'll work for further improving that. In this traditional IRE, which generation like solar, wind, hydro, our present book is around 62%, in which 80% assets are commissioned asset. So when the asset become commissioned, the project is largely de-risked. So that risk premium we reduce. So therefore, the
Understood.
spread and margin in those projects will be less. But again, the provision coverage ratio there will be quite less.
Understood.
Against others. So if you see other NBFCs, their PCR ratio is at 70%. Ours is at 48%. So
Yes.
that gap is helping us to improve our bottom line. See, ultimately, as I believe, and our investor will agree with me, that ultimately they will see what is your PAT and what is your net NPA. Your PAT will speak everything, and then
Yes.
net NPA.
Yes.
So as long as we continue to do that, and for that we'll further work on reducing our cost of borrowing. Another two strategy we have already requested Government of India to consider us for 54 EC capital gain bond, which we do not have now, which others are having like PFC, REC, NHI, etc.
Yes.
So that will enable us further to reduce our some 5-10 leaves at least in the time to come. Plus, our borrowing composition, if you see, it is almost around 75-25, 75 domestic and 25 is forex. In this forex, hedging cost is paramount. Around 350 to 450 bips is towards hedging. If you see 3 years back, it was just reverse. 57% was forex and 43% domestic. Last 3 years, domestic market was quite attractive, and we could resort to the minimum of the borrowing cost what could be possible, and that enabled us to improve that portfolio in the borrowing to private domestic as well as overseas. But in the time to come, since new and emerging technologies are coming like green hydrogen, green ammonia, which is having huge export potential, so what we have planned in place, also this solar module and cells manufacturing, for which PLI has been announced, and apart beyond PLI also the developers are setting up. Huge amount of investment is going to happen. What we have planned already in place, we have already taken the NOC from DIPAM as well as Niti Aayog. We are just waiting for NOC from RBI to open an office in GIFT City. That will enable us to finance those developers who will be setting up a project overseas or who will be setting up a project in India and having export potential export earnings so that we can borrow and lend them in forex. Natural hedging will happen. So 350 to 450 bips hedging cost can be reduced. That will enable us further our reduction. Plus, we have also a plan in place to go little bit of support to the retail segment, which we do not do now. We can tie up and handhold some small microfinance company or small NBFCs, those who are having the local area presence and command. Through them, line of credit like this Kusum scheme or even rooftop solar, which is not getting a good push in India because IREDA is not able to do that because we are design and structure of our organization is largely to project development activities. We have hardly 175 to 180 employees. And with that, we have a pure play largest green financer in India as on date after 36 years.
Understood, sir. Understood. Point taken. And sir, with regard to your ROAs, 2% plus now is going to be the run rate that you continue to target going forward as well. With everything that's behind you, your net NPA ratio at 1.65 looks comfortable. Your PCR, as you did mention, in fact, that was one of my questions as well. But you did mention as to how your PCR is lower and why is it lower. So with that lower PCR, you're comfortable overall, and therefore 2% plus ROA for the next 3 years. You expect that to sustain at least?
See, will be working out not only to sustain that or further improvising that. See,
Sure.
more and more new and emerging area, our NIM will be much more. If you see, today around 18% of our book is having new and emerging area. There the NIM is quite high in comparison to this traditional established area where the assets are commissioned. Like if you look at ethanol or CBG, e-mobility and its related infra, etc., the NIM is quite high, more than double even.
Understood. Understood. And sir, with regard to the Navratna status, first off, where are we on that? How far when can we expect that announcement if we are already there? And also with regard to the impact, what does it do? Where are your cost of funds today? Where will Navratna status take your cost of funds? Because that is what will impact ROAs, and that's what you're suggesting, that profitability is everything.
See, for Navratna, one has to become Schedule A. So we became Schedule A in September, 27 September 2023. And the meeting was earlier scheduled today, but since listing it is classing, so it is postponed to tomorrow. So there is a interministerial committee meetings will be there where we have to present our case. See, government has a defined mathematics score kind of thing, and we are scoring what is required. Our admin ministry has already endorsed that and forwarded to DP. DP is the nodal agency for doing that. So tomorrow is a committee meeting, and once the committee clears, then it will go to a high-level committee. So we are expecting by this 2023 itself, we should become Navratna. That will change the perception about the company. It is a qualitative improvement in the company, and certain autonomy comes with it, like creation of certain level of positions by the board itself instead of going to government. Second, for capex investment, like we can go up to 500 crores of capex investment on by our board. Right now it is to the extent of 150 crore. So like that others, and moreover, since it's a qualitative improvement, perception changes. So from B Navratna to A Navratna, certainly there are a lot of perception will change. And already our rating agency has rated us AAA stable, and that is from AA plus to straight over AAA stable. It's a very unique kind of thing. Any NBFC getting this kind of one. So in the time to come, this will help our governance as well as borrowings. And
so where does it take your cost of borrowing, sir? How does your cost of borrowing get impacted? And therefore your NIMs will go up significantly because of that.
See, exact number nobody can tell how much it is. Since it is a perception, but it will improve further. It will be definitely some 5-10 bips.
Sure. Understood, sir. Okay, great, sir. Good chatting with you. Thank you so much. Of course, we'll stay in touch. There's obviously the next quarter, Q3, which will be your first quarter as in terms of disclosing numbers as a full-fledged listed entity. So we'll talk at the end of Q3, take a quick update from you on that. But thank you so much today, sir, for speaking with us, taking out time and giving us the vision of IREDA. Thank you so much, sir, for your time.
Thank you very much, and I am sure our team will be further working hard the way they could translate this cabinet's decision, which was taken on 17th March of 2023, to translate to listing. This is in the history of public sector. It's such a shortest time CPSC is getting listed, and that too the listing is giving exponential happiness to all the stakeholders. And we
Right.
kept everything on table, something for everybody on the table.
Right.
So,
Yes.
and the time to come, our team's dedicated effort and best quality governance and commitment will definitely reflect in our result. And definitely we'll be speaking post our publication. And before we could speak, you can see the result itself.
Right.
And we
Right.
do not believe in just setting a number. Number will follow automatically if we keep the fundamentals.
Right.
And our
No, absolutely.
our
Absolutely.
employees
It's a
are
pleasure speaking to you, sir. That is, of course, Pradip Kumar Das, who's the CMD at IREDA. Thank you so much for your time, sir.
Thank you, Mr. Harsh. Thank you.
Thank you.